Hello traders, welcome to another episode. These are the best swing trading strategies you need as a trader when you are in the forex market. Okay, so now first of all we shall consider what we call SMC strategy, and the second one is supply and demand strategy. I know those strategies, they are very common among traders, but most of them they use it wrong way. So now I shall show you how to use supply and demand in the right way in SMC strategy. So now let's start with supply and demand strategy. Actually, I made a full video about supply and demand. I'll pin it in the comment section description. You can go and watch it. So now, for supply and demand, we always consider like two things. First of all, we consider what we call market structure. For example, when our market is in a bullish trend, right? When our market is in a bullish trend, what do we consider? We consider our supply zones. So now, in the bullish market, now we always look for demand zones to buy from, and in the bearish market, we always look for supply zones to sell from. Okay, so now we shall be considering those things, guys. Okay, so now, for example, when you have your market right here, first thing you have to first know is the trend of the market. Where is it trading from? So after knowing that, it will be very easy for you to spot the zone that you trade from. Okay, so now, for example, now there's this market, guys, right? That was a low, this was a high. So now this was a low here, this was a high, this was a low here, this was a high. So now it is breaking lows. So now when the market is breaking lows, what does it indicate to you? It indicates to us that it is in the bearish trend. That's why whenever the market breaks any low, we just do what? We just go up and we look for a supply zone, right? So now we always look for that aggressive selling. Okay, in the supply zone, we always look for aggressive selling. Where has it aggressively sold from? For example, now right here, we have this break of market structure right here. Okay, so now after getting this break of market structure, we always go up here, because now this was the high. Remember, this was the high that led to the break of market structure. This was the high right here that led to break of market structure, guys. Okay, so now that was the high, this was the low. Okay, so now always you'll see that there is this aggressive selling. Okay, there's this aggressive selling, and whenever we see this that means these institutional traders, they left some zones here which they'll come to before they sell again. Okay, so now that's why we take this as an order block. Okay, so now we take this as a supply zone. That's why when the market came back right there, you can see that it sold massively. Okay, after coming back to your supply zone, it sold massively. Okay, always you can even go to your lower time frame and you get a confirmation. Okay, for example, now let's have another example right here. So now we have this break of market structure right here. Okay, we have this, and remember, after that, we have to look for the high. This was the high that led the break of market structure. This was the high right here. So after knowing that high that led to the break of market structure, now remember, this was an aggressive selling. These candles, they were aggressive. Okay, that's why we always look for the start of this aggressive selling, and it started from here. This opposite candle, it is the one we draw an order block to. Okay, I made a order blocks on how to draw order blocks. You can again watch it. I'll pin it in the description, right? So now you can see when the market came back to your supply zone, guys. Can you see that? Can you see here when it came to your supply zone and retested there? You can see how it actually reacted. Okay, so now always it will come back to your zone. It will come back to your zone, guys, right? So now we are here. We are here now. Let's see a demand zone. Remember, in supply zone, we always look for selling opportunities. So for the demand zones, we always look for buying opportunities, and the market has to be in a bullish trend for us to look for buying opportunities. Okay, so now for us to look for demand zone, we have to get a bullish trend. Now for example here, it was a bullish trend. This was a low right here, this was a high, this was a low. Okay, that was a high right there, this was a low. So now this one indicate for us it is a bullish trend. Why? Because you can see this, break of market structure. Okay, and when we get that, always, that's why we look for demand zones in our discount level. Okay, this was a high, so this high was broken right here. That's why you saw the market coming back, right? It was coming back because there was this aggressive buying. Okay, and that means it left here a demand zone. You never know, the market might come back to that demand zone and retest it. So sometimes it will not come back, because when it doesn't come back, you just leave that and you go. So now here, this was another break of market structure, and after that you look for the aggressive. Where was the aggressive buying? It was right here. These candles, they were aggressively bought here, and at the start here there is this opposite candle that started this move, right? So now that's why we drew this as an order block. So now it just came and it tapped into that order block, and you can see how it bought after tapping in your order block, guys, right? Can you see that? It is really a very nice trade, guys. Okay, so now this is another break of market structure, and after that this was a low. Remember, you have to always get the low that led to the break of market structure. This was the low right here. Okay, that was the low right there. Okay, that was the low right there. And when you go to that, you can see that there was this aggressive buying. Okay, and at the start of the aggressive buying, this is the opposite candle, the bearish candle that started the move. You drew the demand zone right there. You can see that the market came back right there, and it bought. You can see here, right? You can see when the market tapped into your demand zone, you can see how it bought, right? With all those pips, right? So now just know this supply and demand strategy, it can help you to swing these trades. Okay, so now another strategy that we can look at is what we call SMC strategy. That is smart money concept. When that is our external structure, maybe it is our daily time frame. Okay, so there is this internal structure that will come like this, right? That will come like this. Okay, that will come like this. Okay, you will see that it will reach a time and it started doing like this. Okay, so we shall always have this internal structure, guys, right? So now always this one will be in the bullish trend, till it reaches a time and it breaks this low, right? This low, it is what we call a change of character. Okay, it is what we call a change of character, guys, right? Until it breaks that low. And also it will be in the bearish trend. Okay, it will be in the bearish trend until it breaks this lower high. Okay, until it breaks this lower high. It is what we call a change of character, or what we call a market structure shift, right? So now that one, it occurs in smart money concept, guys. We are in the bearish trend. Okay, for this market we are in the bearish trend. Let me show you. We are in the bearish trend like this. Okay, this was an internal structure. Okay, we are in the bearish trend internally. Can you see this? This is the structure I drew for you. This was the internal trend. Okay, so now it was in the bearish trend. It was breaking these lows, right, till it reached here, and this one, this low, actually this lower high, it was breaking, making a change of character. Now it started a new trend from bullish to bearish. Okay, we always enter at a certain level. Okay, in this smart money concept, we always consider some order blocks. Okay, we always enter from order blocks, or you can also enter from a fair value gap, as those ICT people do. Okay, so now like here, I'll show you only a few examples on this, because I made a full video about this, right? So now this is the lower high that was broken. And after this lower high being broken, you can see down here that the market came back right here. There was some order blocks that the market really used before it went up, okay? But it was in a bearish trend, right? It was in a bearish trend till that lower high. That lower high was broken, okay? So now let me show you a bearish market right here. Let me get an example for a bearish market, okay? So now it is right here. It is right here, okay? So now you can see that this was a bullish trend, higher high, higher low, higher high, higher low, higher high, boom, okay? So now this was the low that was left right here. Can you see when this low is broken, you can see how the market started turning from being bullish to bearish, okay? You can see how it started from being bullish to bearish, but after it makes what we call a change of character. Then it starts breaking lows, means it starts to follow the bearish trend, guys. Okay, so now with these two strategies, smart money concept strategy or SMC strategy, and supply and demand strategy, you can swing your trades perfectly. Okay.